Okay, in this presentation, I'm just going to kind of ramble my way through a little bit of an analysis, looking at Walmart's financial statements. Now, there are the larger financial statements that you need to find. Your 2015 annual report, for example, right here, could likely be it. But for this one, I just looked up Walmart financial statements 2015. And just for ease of use here, just going to go to Google Finance for Walmart stores. Okay, that brings up something like this. A couple things I'm going to do. I'm going to click on annual data, so we're looking at the entire year. We're already in financials. And this gives me, let me move this so you guys can see it. This gives me information on several different years. Okay, now what Google's done here obviously is summarized this and got just kind of the most important stuff, what they think is the most important stuff, and put it here so we can compare. Okay, but this will kind of get us started, something we can look at. Okay, so we've got 12 months ending 2014, so it's really 2013's numbers, 2014, 2015, 2016's numbers. All right, so the thing you should be doing on analysis, if I ask you to look at a company's financial statements and analyze them, or tell me what you think about them, or compare them with something else, you should start out with the basic numbers, like this financial statement we have right here. But what you're really looking to do is you're trying to find a question that you want answered, and then try to find out the answer. So, for example, I'll come down here to net income. So we've got the net income for 2013, 2014, 2015, and 2016. I'm looking for a question. Okay, I'm looking for something that doesn't quite fit. And then I'm going to try and drill down and try and figure out what's going on. So the net income 2013, 16.022 billion, because these numbers are in millions. Then it goes up to 16.36 billion. I like that. But then we drop down to 14.694 billion. I'm less happy about that if I'm Walmart. And then we're going to drop another $1 billion to 13.64. So now I've got something that I want to answer. Okay, I've got a question, which is, what's going on with Walmart's net income? Okay. Now, to answer that question, I'm going to go farther up in the numbers, meaning I'm going to scroll up to these numbers. Now, if you're in a financial statement, I would look for anything that affects these numbers, because now I know that my net income, which is what my investors are very interested in, what I'm interested in as a CEO, as a manager in this company, is dropping, and by billions of dollars. Okay, that's a big problem. If I were looking at this company, I'd be a little bit concerned. Why are you losing $1 billion in net income year over year now for the last 3 years? So I'm going to look for the answer. The first one is, I'm going to look up here, revenue, which for Walmart means sales. How have sales been going? Well, net income went, remember, up, down, down. Here we have up, like that, down a little bit, then back up again. Now, that fits I'm looking for patterns, I'm looking for trends, I'm looking for things that don't fit. This pattern is the same up to right here, but then the sales went up by $3 billion, and yet my net income still went down, right? Went down another $1 billion even when I had $3 billion more in sales. Now I'm a little bit more concerned. So, you see how you end up with a question. Start looking for the answer, and you're looking for the things that don't quite fit, and then you can kind of drill down on them. So what I did, my next step in doing this, is say, let's get this into Excel. Okay? Which in this case, and in most cases, you can just copy this, and I've already done that, so let's go into a fresh sheet and I'll show you how I did this. You just copy them in here. Okay, here's all the same numbers on the same lines. Not bad formatting. I'm going to go through, just to make this easier, I'm going to go through and delete anything here that doesn't really matter because there's nothing in it. Now, it's possible that there are numbers there in the bigger financial statements, but Google's not showing them to me. That's fine. But I'm going to delete everything that doesn't have any numbers in it. There you go. Now I've got just all the raw numbers. Something you can do, and this is a trick, is when human beings start looking at large numbers, we tend to get rather confused. That's why the national debt, when you start talking about how many trillions of dollars we have, People don't really understand that. So just looking at these, it's hard to see trends just by looking at numbers. You say, okay, up by $1 billion, down by $1 billion. What does that really mean? Because they're too big. One thing you can do is take a percentage of revenue. Okay, so we can even take out the revenue because we have total revenue instead. Just keep one or the other. So what I did is just added a column, and then I'm going to take a percentage equals that divided by revenue. Hit F4 to make that static, and then I can drag this down or do it one by one so that in each case I've got the number divided by the total revenue for that year. Okay, I'm going to do that again. Right there. Drag it down. You can do this one by one if you want to. The important thing is you just take each number divided by the total revenue for that year. That's going to tell us what percent of our revenue we're spending, or we're getting from, in the net income's case, from our revenue every year. Okay? How does that help us? Well, it will tell you how things change. Alright? Just because I'm obsessive compulsive about it, I'm going to change the formatting there. And let's make this a percentage, give us a couple decimal points. Not even really necessary, it's just, yeah, again, I'm weird that way. So, grab all this stuff. So, now we have percentages we can look at, and we can kind of compare trends. So, looking at net income again, let's look at the percentage. This is how much we're basically taking home from our revenue every year. We start out in 2013, we're making 3.36%. Went up a little bit in 2014, like that. Dropped in this would be, let's see, 13, 14, this would be 2015. Dropped by quite a bit. Remember, this is your take-home pay. Those numbers out of billions is a lot of money. And then we dropped again, about the same between here, there, and then back again. So we're dropping in net income. Not happy about that. We don't like drops in net income. We want net income to go up. Then we come up here and look at, okay, what about, we've got total revenue. We know is kind of went up, down, up. We know that part, but let's look at this. Cost of revenue. This would be your cost of goods sold, right? This is how much it costs to sell this stuff. You go 75, 75, 74, 74. We actually are going down, which is what we want. We want these costs to go down. So your sales are going up and down, but your costs are going down over time. We like that. Gross profit, okay, 24, 24, 25, 25. Gross profit is going up. As of right now, we're fairly happy about this. Okay. We like it. We're doing fairly well. Our costs are going down. Our gross profit is going up. We're happy. What about right here? Here are our expenses. Selling, general, admin expenses total. 19 up to 19.24, up to 20.13, up to 20.96. Are we happy about our selling and administrative expenses going up? In general, not. And then if we look at everything else, the total administrative expenses are going up, not surprisingly, because this went up, right? Then our operating income has gone from 5.6 down, 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 okay? Which again, not surprising because we're spending more there, and we did have, less sales right here, which helped to explain that a little bit. And then we go down to income before tax, after tax, etc., etc. And we end up with this net income. So, if we were looking at Walmart, after just looking at this batch of numbers, we would say the sales are going up and down, and that we kind of expect. We'd want to wonder why we have a $3 billion difference between 2014 and 2015. It went up. We like that. We'd like to know why. Was it an accident, or did we do something good? Okay, we were looking for good things too. But then we also want to look at the selling, general, and admin expenses. Why is that going up so much? We don't like that when things go up. You notice between here, if we look at real numbers, sales went down by $3 million. Selling, general, admin expenses went up by $3 billion, almost $4 billion. Then they went up again by over $4 billion. Okay. 91, 93, 97, $101 billion we're spending on this. Now, there could be a good explanation. That's the fun part about analysis. You can say, okay, there's a red flag. This right here is our red flag because it's going up. When expenses are going up, we're worried. We'd like that to go down. But there could be a reason for this. For example, this is all of your employee salaries and things like that. What about Obamacare? All of a sudden, all of your expenses are going up when it comes to insurance and benefits and things like that. This could be natural. All right, could be just fine, but it's something you'd want to look at. As for the net income, we could say, looking at it just this level, that this is tied to this. Our expenses are going up, and therefore it's sucking some of our net income out. We could say that, but that's still just kind of skin deep type analysis. Now, if we compare that to Target, what do we find? Well, let's take a look at Target's. Remember, so I just did the same thing. This is Target right here. Their numbers that got exactly the same way. I just figured those out before. And then here's Walmart. What about their selling, general, and administrative expenses? If it's Obamacare that's driving this up, you would expect it to happen the same way. 20.29, 20.21, 19.88, and 19.22. Theirs is dropping predictably and consistently over the last 4 years. That actually makes this a little bit more of a red flag for Walmart because theirs is dropping. Now you could say, wait a minute, but Walmart's growing and things like that, so it couldn't be that. Well, yeah, it could, because they are growing, but this is a percentage. So if they're growing and opening up a new store, then the revenue would go up because of that new store. You'd still expect the percent of how much they're spending on things to remain the same. Theirs is going up. Target, their biggest competitor in this country anyway, is going down. So even bigger red flag now for Walmart. But taking a look at Target also has some things that are kind of interesting. Look at their net income. Okay, 1.97, negative 1.6, 3.36, 2.73. A negative of over $1.5 billion. We're kind of worried about that. But if you look at it, I won't go into all the details of Target, but if you look right up here, net income before extra items, you have 3.78, 3.37, 4.5, and 3.84. So what happens what are these extra items is the point. Because in this year, extra items was about $0.7 billion right there. In this case, almost $4 billion. Here, actually went up. You got positive from your extra items. And here went up after extra items. We want to know what those extra items are. So when you're doing analysis, you look for something that looks out of whack. You come up with a question. Why is net income falling in Walmart's case? Okay, what are these extra items in Target's case right here? Then you go into the financial statements and try to find out the answer, or you theorize about the answer. Meaning, what, I can see right here that your selling and administrative expenses are going up. That could be Obamacare. It could be you're paying your executives more. It could be that you're going to have layoffs to drop this a little bit. What's going on? And you try to answer the question. With Target, you have to go in and see what's going on with their extra items. It could be that it's nothing. It could be fine. The stockholders know about it and they're okay. Or it could be something pretty horrible, one of the two. The beautiful thing about financial statements and the way that they work is that it's kind of like if you've ever had an older sibling who kept a diary, okay, and they knew that they had annoying little brothers, and so they put it in code. And then the little brother found the code and can still read it, which was, of course, that's never happened to me. Of course not. But that's what this is. If you can look at their financial statements, because they put it all in, 100 pages easily in some of these financial statements for 1 year. So they put all this stuff in there. If you're able to go in and say, what does this mean? And follow it all the way through, you can discover whatever it is they'd rather not have you see. It doesn't mean they're hiding something exactly, but what if the answer to this is we just are paying our CEO and everybody like that a lot more money now, to the tune of an extra $1 billion. Well, that's not something they want to have announced in the news, but as an investor, I sure want to hear about that. If this is because they're just paying their employees more, and therefore, because they've been doing that, their sales have gotten better because their people are happier, well, then I'm okay, because eventually this number will turn around. It just depends on what you want to see and what you want to get out of these financial statements. But that's what I'm talking about when I start talking about analysis. Find a question, find something that throws you off a little bit, something that pops up as a red flag, and go deeper on that and say, what's going on here and how can we fix it? Okay? Hope that helps, at least on the frame of mind, how I want you thinking about analysis and things like that. I hope you have a good week. Bye-bye.